Hello. Yes, good afternoon, everybody. I hope you can hear my voice and also see my screen clearly. This is 29th of March. So today's webinar, I want us to look at some strategies which are very profitable on the long-term trading. If you check our previous webinars, we were talking about short-term strategy. Those are the daily strategy that are very, very useful. If you're a scalper, maybe you're looking for a scalping strategy, then you can check our previous webinar about short-term trading strategies. They are very, very good. If you are just trading them, you should be very, very good. So even the long-term strategy, there are certain things which you must put in place. You must understand them clearly before you can say that now it is true that if I enter this trade and it goes for this long, I do expect this number of pips. Or if it goes my way or does not go my way, I'm expecting to lose or win this number of trades, or this number of pips. So today we do have a strategy for long-term traders, and that strategy is based on three things. It is based on 2 moving averages and 1 indicator, and that indicator is the one I have on my screen. That is the zigzag indicator. I'm going to explain how I'm using it with the two moving averages. So you must be in the longest time frame possible. That is, you must be in either the daily time frame or the 4-hour time frame, or at least the 1-hour time frame for this strategy to be very good for you. The first moving average which you must have the 200 period moving average. Let me add it here. This is a 200 period moving average. You can see it. We have it here. Then the next moving average is 30 period moving average. So going to add it. So to add an indicator, just go to the menu bar, then you go to insert, then the first option is indicator. So you go to indicators, then you select trend indicators, then you choose moving average and you put 30. So the method for all these moving averages, the method is simple period moving average. All of them apply to the close price. Now I've added the 30 period moving average, and this is the other indicator, which is the 200 period moving average. So the idea here basically is to look for sell positions when the slow period moving average, which is the 200 period moving average, has just gone above the 30 period moving average. That's the correct time to look for sell position. And to look for buy position, it is when the first period moving average has just gone below the slow period moving, has just gone above the slow period moving average. So this is a very good place to look for buy position, and this is a very good place to look for sell position. So we could have basically have taken a buy here from this point. After this cross, this was a good buy. Then after this cross, this was a good sell. Then after this cross, this could have been a very good buy. Then this could also have been indicated a sell here, but that sell could have been stopped out because we had another buy here. Then we could also have taken a sell here, and we could also have taken a buy somewhere here. So you can see that basically, if you are looking at this indicator from the how I'm looking at it, you could have had very, very good trades from when this happened. From somewhere here, you could have had very, very good trades even in the past. So it means that you could have had one trade which goes for like 2 to 3 months or 4 months, but eventually it's very, very profitable. Now the question is, how do I incorporate this other indicator, the zigzag indicators, in our strategy? So the answer is very simple. I've understood that most people, they know exactly when to enter trades, but they don't know exactly when to exit trades. So somebody will find themselves in a case where they've entered a trade successfully, the trade is going their way, but they don't know exactly what means, or what if they see means that the price is going to continue in that direction, or the price is now actually reversing. So this is where the zigzag indicator comes in. So when the cross happens here for a sell, you are supposed to look for sell position. So as long as the 200 period moving average is above the slow period moving average, you are supposed to be looking for sell positions. So your stop loss should be at the tip of this candle here, should be at the high of this candle. That's where your stop loss should be at. But as the price continues down and you see that it keeps forming some highs which are lower than the previous high, this high is lower than the previous high, this is lower than the previous high, this is lower than the previous high, the same thing keeps happening, the same thing keeps happening, you keep dragging your stop loss So as I was saying, the idea is to keep monitoring these highs and these highs and these highs and what happens to those highs. Anytime there is a high which is lower than the previous high and the slow period moving average is above the fast period moving average, that is a very good indication that the price is indeed continuing in that direction. So if you had a stop loss here and the price has formed this high, just drag this here and put it at the high of this candle here, or of the high of this indicator. Then as the price continues to form more highs, continue following it, continue following it. And here comes a point where you have this, the price has gone up and took out your stop loss. What you should do is sell it immediately, because this is still a sell. We are still in a downtrend. So we are going to have this sell here. We're going to have, when the price pulls back below this high, you pick another sell position, have your stop loss still the same way. Price continues down, it gives another lower high. We follow it, and we follow it up to this point here, where the price comes to this point. hits it, goes down, then comes back and hits it again, and then it now goes up and ends up breaking above. So after you take this long-term trade and eventually the price hits the stop loss, it is good at this point to either you leave it for sometimes, follow a trend just 3 times or 4 times. That is, when you have a stop loss here and it is hit, sell again. It's hit again the second time, you can either step out or just keep holding, keep selling it until when the price eventually begins to close above that same area. So this is a very good example of where we could have taken a buy position. There's another one here where we could have taken a buy here. Our stop loss would be somewhere here, so we would have had a buy here. We have taken a buy, expect the bias to continue upwards. Then that could be this could be the first place for a stop loss. When the price forms this low, could have taken another, could have had that as the stop loss. Then here also could have had this as the stop loss. It could have been taken out at this point here. So you can see clearly that if we are just following the price based on those 3 indicators, we could be having very good places to enter and to exit trades. Even here you can see that there is a sell, we have a downtrend, so we had our stop loss. The stop loss is shifted to this point, again shifted, again shifted, again shifted here until the price is here. So this is why we could have been stopped out when the price formed this and then it has gone above and hit. That's why we step out. So alternatively, you may step out when there is a cross. When the moving averages cross, that means there is an end of a trade. So even before the price hits the stop loss itself and there is a cross for a buy, exit a sell. If there is a cross for a sell, you exit a buy position. I hope that makes a lot of sense. Like in this case, we could have taken a buy after this cross immediately somewhere here. Our stop loss is here. The price continues up, it goes down, continues up. Our stop loss moves to this point. It continues up, continues down, then goes up. There is a new high low. We put a stop loss there, which is somewhere here. The price gets down and eventually hit it. So you can see the number of pips from this point to this point is actually very big. So this is simply how you can earn a lot of money. If you want to trade long term, then you may want to use a strategy that looks like this. It is very, very simple, but very, very profitable. You just follow what happens, follow price based on those 3 indicators, and you'll get it right. So thank you very much. That should be the end of today's analysis, today's webinar. We're going to meet again next week on Wednesday at the same time. Thank you and see you.